Hey there, everyone. Dave Keller here with Market Misbehavior, and welcome to our latest episode of the Market Misbehavior podcast. Our goal with this podcast is to sit down with top market practitioners, traders, authors, educators, money managers, strategists, anyone that we think has an interesting story to tell, whose perspectives we can try to understand a little better, and whose processes and experiences we can all learn from. Today, a really fun guest, Tom Atkinson. Tom's a co-founder of FX Evolution, coming to us from Melbourne, Australia. Tom is a fantastic technical analyst, has a popular YouTube channel and a great educational platform called FX Evolution, and shares with us some of his lessons learned through his experiences analyzing the markets, what approaches he uses to follow trends, to manage risk, and everything else here in the volatile world that we're experiencing in 2025. So please enjoy this conversation with Tom Atkinson. Super excited to be sitting down today with Tom Atkinson. Tom's the co-founder of FX Evolution, coming to you from Australia. And Tom, remind me, what area of Australia are you in right now?
I'm from Melbourne, Victoria, but as many Americans like to say, it's Melbourne.
Well, one of my questions was going to be, can you do an American accent? That wasn't bad. That was actually pretty decent there. Melbourne. Okay, we'll go with. I always joke that my 9-year-old son Henry always gets a kick of me talking to someone in the evening here, and you're tomorrow morning. So I'm talking to someone from the future. So I'll let him know as soon as we're done that went pretty well. So Tom, listen, you and I met years ago, and I'm a fan of your work. I'm a fan of what you do to educate and sort of inspire others to, try to understand the markets a little better, using a lot of similar tools in the technical analysis toolkit. And I think that's what, I think a lot of the reasons why you and I resonate in terms of how we're approaching things. For those that are less familiar about what you do and how you approach things, give us the quick origin story, the quick background. What sort of formative moments happened along the way to get you to this point?
Yeah, so I think like many traders and investors, we all start a lot younger than people think. And so for me, it was pretty young actually. So
Yeah.
I grew up in the country side of Australia in Victoria, and basically my dad's a farmer down there, so I had a little bit of a farm upbringing, about as far as you could get from finance. But back then, I remember I wanted to kind of, I think there were like collectibles or something at the time at school, and I wanted to get a little bit of extra money, and there was no money to be made on the farm because Dad would put me to work. But what I would do is I'd realize that there was like little things I could do and collect. So one of my big
Mm.
ones was chestnuts, and I remember I would collect chestnuts and I would bring them into bags and then try to sell them door to door to the other farmers and the other people around. And a few people took pity
Awesome.
on me, David, and they gave me a few dollars, and that was kind of the beginning of, I guess you would say, commerce for me. And from that point, I kind of decided, okay, well, wait a second. I wanted to start a few little businesses, so I did
Yeah.
kind of all the standard businesses that people do, the mowing the lawns, all this type of stuff. And around, I think it was around 16 or 14 years old, somewhere around there. There were two things that happened. One of them was our school here in Australia had what we call the stock trading game, and it was basically
Mm.
a competition to see how much you could make. Now, I kind of won that, but not in the way that I probably should have. As usual, you do it in a way that you think, well, wait a second, this is not the proper way to do so. But I bought just the stocks that I knew, and
Mm.
obviously back then it was like television stations and stuff like that, and they were
Sure.
actually doing okay. And then my dad ended up giving me a account, and he basically said, here's a $500, buy a stock, and it went up, and I realized, wow, okay, this is totally not what I thought you could do, and I realized that there was something here. So that was really where the genesis of it all started was, and then of course from that point, I basically got into kind of understanding that there were charts and that there were fundamentals, and there were all these other things that I should be paying attention to. And like most of us, and I think I've really realized this, and so have you over the years, that a lot of us come in when there's crashes, when there's volatility in
Mm.
markets. I really started type of investing in the market, trading the market about 2007, around
Okay.
that point where we were going into the euphoria, into the global financial crisis. And
Sure.
then from that point, the story has just been continuing on. Went to, go into fund management, did fund management for a long time, and then started FX Evolution as well at the same time, which was an education business, is where we're at right now. And then, of course, got onto YouTube, and the rest is history. And now we're here talking. So it's It all started with chestnuts.
I was gonna say, Tom, I've asked that question in some form of hundreds of people over the years. Selling chestnuts door to door. This is a first. That's a first. The first time I've
Yeah.
gotten that response. That's impressive. But I love it, and I mean a number of really interesting moments along the way. You had mentioned kind of casually along there that you found charts. Was there a kind of a moment or a way, or how did you get introduced to the technical analysis toolkit that you and I both use obviously pretty frequently now? Was it what was that moment, or what was that introduction? Was it someone that introduced you? Did you just find it on your own? What did that look like?
Yeah, it was kind of. I guess I found it on my own.
Yeah,
Also, it was just basically that the programs had it and it loaded up. You know how when you load the software and it comes up straight
sure.
up, there's always usually a chart or something. And we
Yep.
have a program called Iris here in Australia, and that's
Okay.
been around for a long time. And it loads like a chart straight away as soon as you load into the program. And usually it was the what we call the XJO, which is the Australian Stock Exchange.
Yep.
And I remember looking at that, but I've always been absolutely fascinated by charts and all of these types of things, David. Like one of the things that I remember at school, we did this what are you going to become a career based program. And it's had me at like one of the highest, I think I was the highest match in the school. And it was like 99.8% statistician.
You will be a stock trader.
I technically never really became that, but the show that it is now evolved into is kind of that way.
Isn't
And
that
I
fun?
love charts. I just love them. So visually, I think we're very visual as humans. So to
Yeah.
me, there was history in them, and history is really exciting to me. And I thought, obviously, I believe what happens in the past often does repeat. There's always those famous sayings about that. So as
Yeah.
soon as I saw charts, I thought this is something to do with psychology. This is something to do with history, and the rest. I just couldn't stop looking at them. So they became easily my favorite tool to be used in
Yeah.
trading and investing.
So speaking of history, I mean, when you think about those formative years, whether when you're just getting started, you'd mentioned buying the first stock, it goes up, and you get that initial rush, which probably keeps you going for many, many years. And then at some point, I'm quite certain you had that first big loss where you went, "Uh-oh, things don't just go up." Can you, recount one of those early losses or a time when you were faced with that? And how did that kind of help shape you into, I guess, the trader that you are today?
Yeah, there were a few of them. so, so
Try to pick just one. Okay, yeah.
oh yeah, no. So there were a couple that I could think of. So I'll give you two because I think
Yeah,
these were both
yeah.
really good learning experiences. The first one was when my dad gave me the money. The first stock I bought made a bit of money, and
Mm,
then the second one that I did was I went into. I didn't really know what it was. I kind of bought into a fund, and I thought it was I don't know. I thought it was a great idea at the time, but unfortunately, that fund was obviously putting my money into someone else's pockets to try to work out how to make money, and they did not do such a good job on that one, David. So I went down, and I had to take a loss, and I remember it was very painful, and I
mm.
just said to my dad, I said, I don't think this is going to ever come back. I was correct, by the way, it never came back, so I ended up losing. Probably of that money, probably about 50% of it at the
Right.
time in this
Yeah,
mutual fund style thing.
yeah.
But the real lesson to me actually was around the global financial crisis. It was a
Mm,
trade where I was straddling news information in the FX world, and what I would do is I would put like spreads on around big news, and I didn't really realize about slippage. And for anyone that doesn't know what
wow.
slippage is basically when you get a lot of volatility or illiquidity in the market around a news event. Sometimes it can gap price, and it's so quick you don't even see it.
Yeah.
And I still remember this. I was doing pretty well on all these trades, and then one of them, it was just gone. It was gone. Everything was gone. And I thought, how is that possible? I had all this risk management. Even luckily, I did back then, but it was just
Yeah.
gone, and in 20 seconds. And I still remember the US market's hard for us to trade, so it was about 1 o'clock in the morning, Australian time, and it was gone. And I was like, my eyes went open, and I thought, this is not possible. Little did I
Right.
know what had happened is it had taken both the top and the bottom trade at the same time due to slip widening. And I
Perfect.
learned the lesson. I never forgot that. I've never done it again. And that's the key in trading and investing to be successful. Don't do the same thing on
I love
repeat
it.
if it's bad.
I mean, I hope I always tell people the goal, especially with younger investors, the goal is to learn some of these painful lessons when there aren't so many
Yeah.
zeros associated with your account.
Oh yeah.
Just try to get those under your belt and learn from them. But slippage, I mean, it's such an important reality for trading. And I always tell people slippage is the gap between what looks really good on paper and what actually happens when you try to put it
Yeah.
into practice. And so many times people kind of like, and even paper trade something, it seems really good. And then you go to actually do it and then it completely blows up. And a lot of times it's something related to what you described. I think that's a great lesson there. Tell me a little bit, I mean, about your trading philosophy. When you started talking about risk management and you talked about the global financial crisis. I think for a lot of investors, if you were trading during that period, you probably learned a lot of lessons then. For me, I started in the industry in 2000. So 2001, 2002, kind of the tech bubble. That was when I learned about charts. So for me, it was all about risk management because that was so valuable. What sort of tools or techniques or approaches have you found helpful to manage risk? Again, assuming we're in a 2025 where the market appears to be going onward and ever upward with no stop until the last couple of days. What does risk management mean to you? What sort of techniques do you use to implement that in your process?
So I think there are a lot of different risk management techniques, though. It depends whether you're an investor or a trader. I
Yeah.
think for investors, I think one of the things I never do, and they often people do say this, that you should be concentrated to make a lot of money. I have like a rule that's like no more than 20% in any sector,
Okay.
if I can help it. Now, sometimes that goes if for investing this is so that
Yeah.
sometimes that can kind of meld itself, especially with tech, because you might have a semiconductor sector and then you might have the tech sector, and technically they're kind of linked in some ways.
Yeah.
But what I do try to do is I try to limit it like that. And what that means is I've got these buckets. And what I learned with the investing side is I don't try to get too cute with it. We do charts. So for me, if I'm trying to, let's say, invest into semiconductors, I probably would be creating my own portfolio of that 20% within maybe 5 stocks. And I look at past performance, and I also look at future guidance as well. And then
Mm.
what I'll do is I'll basically put it so that I blend it. And why that I do that is we live in Australia, and when you're in Australia, you cannot be awake during the US market. So imagine you have all your money invested, all your trading overnight. How are you going to sleep? And I probably have a few bags here for you, little bags here that I've got over time. But like a lot of that's because there's stress involved, especially when you get into the bigger numbers and especially in the trading side. So for me, everything had to be designed about could I sleep knowing that I would go through earnings. And I always remember this idea that Buffett had, which was that he didn't care if the market closed for 10 years tomorrow, or he doesn't care if that happens. And the reason is because he believes in all his positions. So in my
Mm.
case, I don't want to go through earnings season stressing out about having massive, let's say a little bit of leverage on, or I've got investments in, worrying about any particular thing. And I teach that. And the one of the things that's most beautiful about it is it just means that you can go through every earnings season and you just don't have any stress in the earnings. Because yes, okay, maybe big Nvidia earnings is coming up and it's worrying, but it's only one of the five. And that's why index investings work for so many people. But for
Mhm.
me, it's all about that keeping those buckets good. In the
Yeah.
trade side, David, I'll answer as well. The way I look at it is just basically you have to always treat the trade with scale. So what I
Mm.
do is I thought a long time ago, how do the biggest investors, traders get into markets? They don't just buy one position and it's done. They buy lots of positions over time. So I like to reward trades as they hit technical barriers. So I might enter the first
Mm.
one. Let's say I put a third or a quarter of my position in as it gives me the first trigger. And then I'll reward that trade as it kind of reaches the goals that I want. So let's say it now takes out a higher high on the charts. I'll give it maybe half of the rest of the allocation. Then it does a little pullback to a 38.2 fib. I'll give it the next allocation. And I have these rules around that. And what that helps me do is not only does it help me, make sure the market's going in my direction first when I'm putting all the money in, but I also don't have any FOMO because I'm
Mm.
getting a lot of trades in with a third or a quarter of the investment. And it's really awesome. It changed the way I look at markets.
It's so funny because, to your point, having worked with a lot of institutional investors, they often think in terms of allocations. They think of in terms of how much they're allocating to a bet and ratcheting that up or down. And they would never think of like, I either own the stock or I don't, right? There's all these levels. And I feel like with individuals, a lot, certainly when they're getting started, think of things way too much in a binary framework, right? I either own 100% or 0%. Kind of to
Yeah.
your point is you own a little bit. And then if it works, you give a little more. And if it doesn't work, you've got very little to unwind. I think that's great. So flip it to the other side, right? So in an environment where I would guess if you've been following the AI fueled frenzy here in the US and elsewhere, a lot of things have probably been rewarded with further and further uptrends. One of the worst mistakes I feel people make, or one of the most painful mistakes, is you sell when something's up like 20% and then sit on the sidelines as it goes up another 200%. So what sort of approaches or what techniques do you use to avoid selling too early and to participate in uptrends as long as they go? Are there any specific approaches that fit in with your approach?
Yeah, so I use cycle concepts
Okay,
very
yeah.
heavily for investing, and the reason I do that is because I think, as I said, the charts show us psychologies in the markets, and to take advantage as an investor or position based trader, as I call it as well, you're going to have to be very clear on where you think a market is going to expand to. And there's always that famous quote that says the markets can stay irrational longer than you can remain solvent when you try to short against it. That's for sure. But what I've learned is that markets can push some pretty high multiples. So I
Sure.
don't try to time exactly the top. What I try to look for is what do I actually think could take a market down properly. And I'm not
Mm,
talking like a 20% drop. I'm talking about, a GFC,
yeah. The
a
drop. Yeah.
1929, like a big one, because I'm really not concerned about the others. The others are just opportunities to buy. So you've got
Yeah.
to ask yourself, what is really the systemic problem? How does the market, how do we even grow as an economy? And I always have it down to three. I have like what I call three factors. And those three pillars of kind of the economy is all I really look at: population growth, innovation, and debt. And actually,
Ooh.
the most important one's debt.
Yeah.
So I look for debt expansion. Everyone else freaks out. I just I just say if it's expanding, you're growing. So the good thing about the US is we already know it's the number one innovation market in the world. So
Yeah.
wherever the best innovation is, guys, that's usually the best market in the world. And then, of course, if you've got a bit of population increase, that helps because that helps keep the long term thing going. But all I look at is debt, David. If I'm worried about the markets, the only thing I'm looking at is debt. So how do I hold it for a long time? I have a lot of confidence in my keys, my triggers, and my
Yeah.
7 keys that I built around, how are we actually going to see a market unwind. And for now, we're still bullish for now, I guess. Yeah.
Yeah, so perfect transition into what we're seeing right about now, right? I mean, and again, I don't know if this is a perfect time to speak with you or not because we've had, I mean, we've obviously had an incredible uptrend in the S&P off of the April lows. We've had a series of just, I mean, honestly, brief and relatively painless pullbacks. And so this pullback that we've experienced from last Friday with the aggressive sell-off, we're recording this on Tuesday, October 14th, where the S&P sort of testing the 50-day moving average. Talk me through like how do you sort of paint the picture of the S&P at this particular moment, and are there any key levels or signals that would help convince you that maybe this time is different, for lack of a better phrase, given the pullback, compared to the other pullbacks we've had so far off the April low?
Well, I think this one was due, and
Yeah.
you all can see it on the chart here. It was pretty good. It was what, the third fastest rally in history or something like that. Probably getting a little bit high. You could correct me there, but we had all those triple 70 breadth thrust, wag breadth thrust, all those types of things. So I think firstly, whenever we're looking at the market, we have to say, in history's terms, has a market like this generally continued, even with a pullback? And the reality is usually yes, based on the stats. So if we're running stats on Zwags, stats on triple 70, stats on everything that we've seen breadth thrust wise, and just in terms of structure, it looks like whatever happens here, even if the dip keeps going for a standard 5 to 8%, it does look like, in my opinion anyway, that we probably will see it by the dip. Now, it also comes down to, as you said, what's the problem? What actually is occurring this. So right now, I think, yes, okay, it's the tariff discussion, but really it's a mixture of too much leverage. So lots and
Mm,
lots of retail traders were coming in, especially in crypto, and they were using 100 times leverage to buy some weird coin. And then, of course, what happens is as soon as that goes down even 2% or 3%, they get liquidated, and then it becomes a liquid. And then we saw what we've seen this week. It's the same thing happening in the stock market. Everyone's going into triple levered ETFs. So triple levered ETFs are everywhere. Like I heard there's a company that's got 59 due on December. In December, we've got a new stock exchange, I believe. All you've got tokenization. I still think there's going to be more leverage by the time this thing's all said and done. So the way that I look at it at the moment is just like you've got it here. There's a bit of a trend line coming the way back through. We tapped yesterday with or today, I guess, in the US,
Yep.
with a pretty. I'm in the future, David.
Yes.
so I talk about yesterday when you guys are talking about today. But yeah, we've basically got a big support there that you've got highlighted with your yellow box, which is
Yep.
or yellow line, which is clearly a very key level. But if we drop that, I'm looking at the weekly 20 moving average, and of course
Right.
also that 63.50 zone. I think the thing is right now it just depends. It reminds me so much of 2020. If you're looking at structural points, then basically we're looking at that 2020 period where you've got a market that's rallied a lot. We know a lot of Wall Street traders were behind it. It's the one that's over there. Yep, that one there.
Yeah.
So we sold off pretty heavily, and then what happened was we actually double bottomed, sat there for a little period, and then continued the trend. But that time around, we continued the trend with kind of a different market structure. We were doing it with the Russell. And for anyone that doesn't know, the way that this market picks up off that first rate cut, if it's large caps, that's actually really good for the US market moving forward. If it's mid caps or small caps, it's actually less good. So it really, to me, is not so much a question of whether we do find buyers. I think we will, because the problems can be taken away with a click of a finger in some ways. We can just change some policy and get it fixed. But the problem is going to be what starts to go up. And back then it was the Russell. So I'm looking very much at the market structure, but for now I'm thinking it could be a double bottoming style pattern.
Interesting. I mean, what's interesting, I mean, and if we are in sort of you are here kind of moment, I mean, what came after 2020, I mean, this is obviously a different era in so many ways coming out of the COVID low, but 2021 was one of the more just consistent bull markets that we've seen in
I don't think it's going to be that kind of consistency. I think it's going to be a lot of ups and downs. But what I do think is going to be marked by leverage. So I think everyone's chasing, and I've never seen this before, the amount of people that have no idea. And it reminds me of 2007 when I got in, because remember, I was kind of getting in near the end of the historic run. And the reason, well, one of the historic runs, the reason why it was such a big one in Australia is because remember, it was minerals based. So we were mineral mines based. Our index went up 100% in like a year and a half, 2 years. So everyone in Australia was loving life, and that gets you in. And what's happening right now is I've got people that I know that, because they're my friends, I know they don't know anything about investing, trading. They don't even know what an index is, and and they're now suddenly investors. And that's of about 2 months ago. So what that tells me is we're starting to get into the frothy part of a longer term cycle, in my opinion. Well, some people say it's early, but I think it's starting to get up there. And it's going to have a lot of leverage. So I think there's going to be that kind of basing structure. But then the question is, when it comes out, is it going to be led by mid caps Russell? If it is, then that's a little bit concerning for me. So then I'll start to reevaluate, my long term stuff as per your question before.
It's so funny you mentioned the volatility. I mean, if you told me, given the presidential administration we have here in the US, and I definitely don't want to get political, Tom. It's my goal in life is to avoid that if at all possible, and keep things positive. But the amount of market volatility compared to the political volatility is very striking right now, right? The markets have been fairly calm with this nice consistent uptrend. And what we saw sort of in that March, April timeframe, it sort of felt like that's what the markets were going to be like going forward. Like that was going to be the future for the next 4 years. It's surprising, but for me, is a great reminder of not just making assumptions about what volatility is going to emerge, but actually looking at the charts and seeing what happens. And to your point about altcoins and leverage and over leverage, I'm striking, and I'm wondering, because I know you do a fantastic show recapping market activity, and you build such a great community with FX Evolution. I'm surprised at how many people are asking me about the big drop in altcoins, which tells me they're paying attention to those, which tells me they probably have some skin in the game there. And I'm scratching my head thinking, why are people going into these things which certainly don't seem like a very stable place to be. So the anecdotal evidence certainly agrees with a lot of your comments there. Um, so tell me this: what we've talked about just already, just a number of things. Obviously, a technical discipline. You're obviously able to talk the language of technical analysis as well as anyone I've spoken to, and talking about key levels. But you also are thinking about all the macro drivers that are driving the right, the political situation, geopolitical issues, things happening globally with a lot of conflicts that are sort of in flux at any given moment, interest rates, inflation, whatever else we want to talk about. How do you balance sort of those macro non-technical things that are realities that can change at a moment versus a grounded technical discipline that's focused on charts? What does that, look like in your process? Do you think of them separately and compare? I mean, how do you weight one versus the other? Give some hope to people that are struggling to kind of balance that in
Yeah.
2025.
It's probably the hardest thing to do.
Yeah.
The difference I learned in wealth management, which is where I also come from as a base. I learned that there's a lot of bias.
Yeah.
In fact, they teach you about all of the different ones, and I didn't know
Yeah.
there were so many words that you could attach to bias, David. But there clearly is, and
Yeah.
and one of the things in trading is that we tend to. I call it Superman syndrome. We tend to
Yeah.
get a little bit too maybe arrogant about our bias and our thesis. So what
Yeah.
I always do is if I ever have like a really bullish thesis, I go look for the bearish one and I just see whether I
Love it.
try to do a check and balance on it. The
Yeah.
key is to, what's the big and most important word in trading and investing? Temperament. If
Mm,
you ever feel really bullish or really bearish, there's probably a big problem. Your
yeah.
temperament has to be like monotone. The great investors that I've ever met, I haven't even met half of them, but that I've ever seen in videos, I feel like I meet them sometimes. They always are like just monotone. They're like, zzz. They're kind of
Yeah.
like, if you had a heartbeat, it would just be like, zzz. And that because they're so well rounded in the
Yes.
way that they stick to their system. So in this
Mm,
case, I guess for me, how do I marry macro up with technicals? What I do is I try to cut through it. I say, does this really matter? Will I remember it? The easiest way to say it is,
mm.
will I remember this in a month's time?
Oh, I
So
love
if
that.
you say this year, Liberation Day, let's say, I will remember that one. Okay, so that was
Yeah.
probably relatively important.
Yep.
If you ask me what happened with the PPI a few months ago, I don't know, David. I have no idea. I don't remember that. I don't know. So it
Yeah.
doesn't matter.
Yeah.
So and some people say that's naive. No, I say it's likely that it doesn't matter. So what I really am doing is I'm looking at the charts for flow. I look for the big trades. I love to find the biggest trades. Like if I can find massive, what I call dark pool trades, which you'd be familiar with, and I'm sure audience can look it up and chat
Yeah.
GPT or whatever and figure out what it is. But basically, dark pool trades, I look for those. I look for massive, massive position flow. And I just
Mm,
ask myself the question of, what's the general sentiment? If everyone's super bearish on the sentiment surveys and the charts are going up, David, the wall of worry is happening and I want to be
yes.
involved.
Yeah.
So to the upside. So I really just marry it to the point of will I remember it in a month's time? If I won't, I ask myself that question every time, then I probably just ignore it in the macro side. And
Yeah.
in the chart side, I tend to follow the trends. The markets, especially the US markets, are mostly bullish biased. So I generally want to be more bullish than bearish ever.
It's one of the toughest things, Tom, for me to try to get my head around. I'm 25 years into this and still struggle because, and I would attribute it 100% to when I started in the industry. I learned about charts and technical analysis when all these great charts from the late 90s started looking like absolute garbage. And
Yeah.
so I learned the lesson of, all right, don't trust uptrends, get out of the way, just look for those signals. And that's great when the market starts to top because I feel like I'm very well prepared for it. But for me, and I think, to your point, I think having a good awareness of what your weaknesses are and what you struggle with, although some of those biases, having some honesty and humility about what biases you have probably
Hmm.
are the way through, or the way to get to the other side.
Can I give a tip to everyone, David?
Please.
If I think if you want to take it to the next level in trading and investing, you need to understand your personality type. Now,
Mm,
some people believe that's not a thing. I tend to believe it is because I find it to be very effective in trading tools. But
yeah.
if
Okay.
you don't do that, the market is the great equalizer. It will it attacks everyone's personality. Doesn't matter which
Yeah.
type you are in some
Yeah.
way.
I
So
was
the
gonna say,
key
right,
is to know
it treats
where
us
are your
all
triggers.
equally, right?
Yeah, yeah, it treats us equally in that art.
Yeah.
But yeah, if you find out, then you'll be able to find your weaknesses, and then like I have some, and you do too, David. I'm sure we
Yeah.
all do. And the key is can we control them with techniques? So
Yeah.
one of my favorite techniques is I like to get in and into the market. So how do I do that? I scale.
Mm. Right, right, right. What so since you opened this can, what are there any particular personality assessments or anything that you suggest or that you've used that you found the most
I mean, the
helpful?
classic is my Briggs,
Sure.
which a lot of people use.
Yep.
That's probably the classic one that I
Yeah.
always say you should start with. There's a lot of different ones that have come out over the years. That's the original one. But what
Yeah.
I find is that y- you don't want to necessarily pigeon yourself too much into any one of them. But when you find it, then go out and have a look at some of the others and just see whether the others are also confirming a very similar path, because
Yeah.
like it's like a cross checks and balances, because obviously you're answering questions, and I would say do like two of those, then do like another one or two of a couple of other methods, and then see whether they come out with a similar result. And if they do, then the reality is it probably is something around there for you. And a lot of people, I think nowadays everyone likes to think we're all unique individuals, but I always say in the market that we've got fear and greed, David, and fear is more powerful than greed last time I checked. And I think that might be genetically or at
Oh.
least built into us. So, like the
It ap
cavemen, that when
it appears
not
to
that
be
there was a
hardwired,
dinosaur,
yeah.
but let's say there's a giant big mammoth coming at us, we're probably going to have some fear and we need to run into the cave.
Yeah, yeah, yeah. No, I'm so glad you brought this up, Tom. To be honest with you, I mean, personality tests, and I would echo most of what you said. I think I'm a big fan of them, and the Myers Briggs test, the Enneagram is another one that I was
Yeah, that's a good
introduced to
one.
years ago, and I think they're so helpful for two reasons. Number one, it helps you understand why you do certain things in certain ways, and if you've ever been like, why did I do that? It at least helps you understand. Well, this is kind of why maybe you have done it. But I also agree. Yeah, don't feel pigeonholed like you. That means that is what defines you. I don't think that's true. But I think if it can help you reflect constructively and think about how you can improve yourself and how you can address challenges that you're naturally going to face, I'm a huge fan of that. So
Well, no one else is going
100%
to
agree.
tell you either.
No, go ahead.
I said no one else is going to tell you those things about yourself, because you say, oh, by the way, I think you're deficient in this, or you're not doing so well in this area. No one's going to say that to anybody, so
Then your
they're just
relationship's
going
in
to hate you.
jeopardy, Tom. We don't want that. No, but I 100%. I think that's super helpful. And in my experience, the most successful traders and investors that I've worked with are the ones that seem to have a pretty good handle at what they're good at, and especially what they're not good at. And they
Yes.
find ways to make money based on things that they're good at, their
Yeah.
natural inclination to figure things out. But they also have surrounded themselves with systems and routines and resources to help address those things that they're not so good at. And I think a lot of people just getting started kind of ignore that and just assume they're going to be good at everything, and then the
Yeah.
market will tell you very quickly when that's not true. So I really would love to finish off with this, Tom. This has been a lot of fun. I'm so thankful that we've been able to chat today. Tell me a little bit just about what you're doing at FX Evolution, and the way I know there's a big educational component and community component to what you're trying to do. So I'd love to hear a little bit about it, and specifically would love to know what's sort of the number one mistake or shortcoming that you find people that come to FX Evolution are struggling with, and how do you kind of try to help them through that?
All right. Well, thanks very much, Dave. So basically, we run for anyone that wants to know, we run a show over on YouTube. I guess the biggest one, and basically, it's a daily show where we talk about the markets after the close. We go through what moved them, what could potentially be happening in the future. We go through a lot of the macro side, the technical side, bring it together with data as well. So it's really interesting and exciting to do that, and it's very much the line that I like to use. The show
Yeah.
gets like 50, 60,000 views a day, which we're very thankful for, and it's been
Awesome.
amazing to see. But the thing in our private community, which we also run, is obviously we do have education courses, and I designed the day trading masterclass specifically around people that have almost no time or need to sleep through the night, David. Don't freak out the US markets. So that is an excellent resource for people. It's actually not quite day trading. What it is it's days. It's actually it can be day in the day.
Yeah.
It could be, it's maybe sacrilegious to call it day trading this way. It goes into days though, and even weeks sometimes in terms
Mm.
of structure. It's actually what I call position-based trading.
Yep.
And then of course we have our advanced cycle analysis, all that type of stuff. The thing with the community though, what we were trying to achieve is really getting people from around the world to share and to learn some of the systems that I go through the courses, and then actually to start finding them. And what we've found through the years is people have gotten pretty good. So now we have like a little watch list that gets updated where we check it off each day and have a look through the different stocks that have found trigger setups that are similar to what we've kind of been talking about. And it's awesome to have so many eyes on it. Like even I've been like, oh wait a second, this is this is pretty good. I don't even know what this stuff is, but I like what I see, guys. So that's been awesome. In terms of the one problem or the main problem that I see people have, it's got to be just it's the problem is we go through a stage. So when we
Mm.
start trading and investing, there's always a stage. The first stage is buy something. Usually, what happens, it goes up. I'm a genius. Okay, I'm the best investor.
This is
or trader
easy
in the
somewhere
world.
along the lines, right?
Yeah,
Yeah.
genius. Then what happens is you find out about generally most people kind of go from the first stocks to maybe they go into mid caps and they say,
Mm.
oh, wait, what's this mid cap, small cap kind of thing going on? Then they'll find options or CFDs in Australia or futures in
Yeah.
America. And then they'll come back around and then they'll find options again. And then they'll come back to usually blue chip stocks. So what I find most people do that's wrong is that as soon as a crash happens or a fall in the markets, everybody wants to go and have an instantly be told what to do. Do I need to buy? So we buying today is the
Yeah.
one I always get. So we buying today? It's like literally like that English. And I'm like, well, no, we haven't seen any structure. We just fell. We closed on the lows. We haven't seen any bid. We haven't seen anything unless you're an investor, dollar cost averaging. I'm not sure if you buy. So what I think most people do is we all try to catch the falling knife.
Yeah.
And that's where everyone ultimately makes big mistakes because they win with all the blue chips. Then one day they buy that one stock and it doesn't stop dipping.
Yep.
Yeah. So that's the
Oh,
problem.
that that's a problem for anyone listening. I'm sure they can have a personal moment in their past where they can relate what you just said to their own experience, Tom. I think that's
I got a few.
widespread, but well articulated. Tom, this has been a ton of fun, and I appreciate it. I'm so glad you and I met years ago. I'm glad we kept in touch. I hope we can continue the conversation another time, but for now, I'm super thankful you gave us some time today. Thanks for joining us, Tom.
Thanks so much, David. It's a pleasure to be here. Always great.
A lot of fun talking with Tom Atkinson. I met Tom years ago at a conference. We've kept in touch, and I was super excited to bring him on the show and chat with him a bit here about the current market environment. 100% agree with his general assessment on things, right? Stocks going higher, precious metals going higher, but having a clear level, a clear line in the sand, or a limit at which you sort of agree to revisit things. I thought his three comments about the macro, perspective: population growth, innovation, and debt expansion, I thought was really well articulated. I think it's a great way to think about the current market environment. His comments about slippage, about overconfidence, the use of personality tests, which definitely resonates with me, with focus on mindfulness and the mental game of trading. Just thought his comments about the challenges that early traders make and some of the tools and techniques he's used to get ahead of those, I think really well articulated. Would 100% agree with our discussion and his comments about being humble, being aware of who you are as an investor, what you're good at, but especially learning what you're not good at. As I mentioned to Tom, I found, having worked with some really successful investors over the years, in my experience, one of the consistent features or characteristics of a successful investor is a good awareness of themselves, right? Self-awareness, what they're good at and what they're not. And they tend to surround themselves with systems, processes, platforms, resources to help address those weaknesses. And I hope that you can find ways to do that in your own process. Special thanks to Tom Atkinson and the folks at FX Evolution. Great to catch up with Tom. Hope we can have him back on the show, but for now, there's a really good intro to how he approaches things and what he's seeing in the current market environment. By the way, if you want to learn more about some of the tools and techniques that we talked about, how to follow trends, how to have a humble analysis of your own strengths and weaknesses, and how we can work together to start to address those weaknesses, our Market Misbehavior Premium memberships may be a great opportunity for you to improve your own decision-making. 3 great benefits to the premium membership. First off, virtual courses like Flight School Behavioral Investing, where we teach all about behavioral finance. Those are those behavioral biases Tom and I talked about in our interview today. Also, technical analysis, a practical set of tools to help you understand what's happening around you as an investor. Second benefit are members-only reports like our weekly flight plan, our monthly chart review, where we apply some of our proprietary tools and techniques to the current market environment, focusing on what's important and what's actionable. Finally, you have full access to our member community, a small but thriving group of like-minded investors asking questions, learning from each other, going through and trying to improve our approach to the markets. I'm in there every day answering questions and sharing charts and ideas, and I hope you will join us there as well. For more information on our premium memberships, go to marketmisbehavior.com/premium. Don't forget to use the code PODCAST, by the way, when you check out for a special deal on your first 12 months on any plan. That'll do it for today. Thanks again to Tom Atkinson of FX Evolution joining us today. Thanks so much for watching and for listening. For Market Misbehavior, I'm Dave Keller reminding you, it's always a good time to own good charts.